It's a crazy time, as I mentioned last time. I think, the day PBOC announcement should go down in the financial history of the China financial market. And it happened, And the mood on the ground is, if you like, you talk to the trader, they are doing this. Warming up, meaning that, account opening and some of the old and young trader, and then it also sentiment in Hong Kong. It has been years since people, I heard about, stock trading, buying stocks in the MTR. If you walk around the street, people are talking about buying stock, etc. So fundamental sentiment is good, and I think we are positioned for a 10% up in the market, in the domestic China market. If you look at the ETF, actually the China ETF in Hong Kong, actually they are trading up 12 to 20% premium compared to the previous close. So I think we are in a very strong trend in the upward market.
We were expecting a pop-up.
Yeah.
Right? So the Shenzhen opened up, 12% higher? And it's already now, up 11%. So it's cooled off a bit. And the Hang Seng Index started a gap down 4% after last week's yo-yo. So the sense I'm picking from market participants, and William, you'll have to weigh in on that, is that there would be an initial bit of excitement, an initial bout of excitement, but then that'll settle very quickly. Because the fundamentals of the economy have to follow through for investors to take strong, high conviction call in the market. Right now, it's a discount sale. It's a rising tide lifting all boats. Right? And it's not even a stock picker's market because everything is going up. Everything you touch is going up. So you want to just ride the wave. But once it kind of settles down, which seems like it is going to pretty quickly, then what? Like, do you think the estate planner can give enough to the market in about half an hour's time for this rally to continue? Or, like Sam said, they would be underwhelming and talking down sentiment a little bit, saying, okay, calm down a bit. This has gone too much.
I wish they do the calm down thing, but my expectation is they don't. Because look at the timing of the announcement. It's 10 a.m. during the market opening. So I think the commitment is already there. I wish the sentiment could be more, rational, and then the retail trade, etc. don't use the leverage. Right now, the leverage is about 1.3 trillion renminbi compared to the peak in 2015, 1.8. So it's at a, discount.
But then what about news reports highlighting that some money managers are imposing caps on how much retail investors can buy amid this deluge interest? And they're also putting limits to how much money you can borrow for margin trading, right, to put into the market. So people might be opening accounts left, right, and center, but
there's a cap.
There's a limit that's being put into how much you can borrow and how much you can put into the market.
This is all the good things. This is the animal spirit. Sometimes the more they ask you, like my parents asked me not to do anything, you wanted to do it more.
So you find ways to do more.
Exactly. So I believe the sentiment is there, and there will be series of policy. And this time around, if you do the survey and talk to the manager, the rally would be driven by retail. And then secondly, domestic institutional investor. And third, the global hedge fund. So the retail is the key to watch.
You said animal spirits, William. When do you think the animal spirits in the stock market will be matched by those in the private sector and the consumer?
Yes, I think a lot of our clients is actually business owner. When I talk to them over the, Chinese holiday, actually the consumption figure is recovering, the mood is covering. I think the key is for them to hiring, spending capex again. And again, it's wealth effect for them. So that would be the second leg of the rally, if you like. If we wait for the financial figure or earnings, etc., it would take about a month or two before we can kind of like see the results. So short term, it would be price driven, sentiment driven rally.